Greetings, traders, and welcome back. Thank you for joining me for another Survival Guide episode. Today, we are going to be covering gold futures. We'll talk a little bit about the history of gold, and then we will dive into the futures aspect. So let's get going. Gold. It's something that everyone wants, and no one is unhappy to receive it, unless, of course, you have some strange allergy. But before we go further, let's talk about some of the science behind gold. So, gold is a chemical element with the symbol Au. In its purest form, gold is dense, soft, malleable, and ductile. This makes it good for use in technology because of its ability to be turned into wires and use in circuit boards, etc., etc. It is solid under standard conditions, which is a good thing considering liquid gold at room temperature would be quite a problem. Gold is resistant to most acids, making it a very durable substance, and gold is a relatively rare element, adding to its value. Gold is a good conductor of heat and electricity as well, which once again add to the value of gold. If we understand the value that gold holds, we'll better understand why people want it. In order to understand gold in its entirety, we must first go back to the beginning. So, gold is something that's always been highly valued, whether it be for coinage or jewelry or arts. It has always been considered a unique store of value as well as a symbol of power, strength, and wealth. And since the 2000s, we've seen gold at times more than quintuple in value. Approximately 65% of all the gold in the world has been mined since 1950, and the finite supply of gold adds to its rarity and attraction. But how did it all begin? Well, various forms of livestock, in particular cattle and grains, were some of the earliest forms used to settle trades for payments of goods and services. And the problem with this, cattle are hard to carry in your pocket. The world needed an alternative currency. In 560 BC, the Greek state of Lydia in Asia Minor introduced the first gold coins. So we've seen gold coins since 560 BC. The use of gold coins as currency spread quickly throughout the Mediterranean and the Middle East regions. The Romans mined gold extensively, and Venice introduced the gold ducat, which became the most popular coin in the world for the next 500 years. In 19th century America, a movement to use silver coins and adopt a bimetallic monetary system finally emerged. The U.S. Congress did not authorize the printing of paper money until somewhere around 1861. For most of the early 20th century, Americans were forbidden to buy or trade gold. In 1946, the Bretton Woods Agreement fixed the price of gold at $35 an ounce, creating a gold standard, and the U.S. dollar became backed by gold. A gold standard is defined as a monetary system in which the standard economic unit of account is a fixed mass of gold. The Bretton Woods Agreement of fixed exchange rates was implemented to combat deflationary pressures, economic dislocations, and currency instability which emerged after World War I and World War II. Soon after the agreement was signed, the US dollar became the world's reserve currency. In the following years, there were significant strains on the system of fixed exchange rates as the U.S. balance of payments with the rest of the world grew dramatically. Foreign exchange banks exercised their gold convertibility rights, causing a sharp decline in U.S. gold reserves. In 1971, the Bretton Woods system was abandoned when there was no longer enough gold to cover all the paper money in circulation. The US dollar became a fiat currency backed by nothing more than the health of the US economy and the promise of the US government. A fiat currency's value is based on the issuing authority's promise to pay, not an intrinsic value or extrinsic backing. And in 1974, the ban on U.S. ownership of gold bars was lifted, and U.S. citizens were allowed to trade gold yet again. The end of the gold standard ushered in the current system of floating exchange rates. And in 1972, the Chicago Mercantile Exchange, otherwise known as the CME, launched futures trading in 7 currencies, and in 1974, the first gold futures contract was traded on the COMEX exchange in New York. Everybody likes some fun in their life, so I've brought you some fun facts that I found interesting personally about gold that I wanted to share with everyone. Number 1 is that Antarctica is the only continent where gold is not mined. And this is not because there is no gold there actually is, but because of the Antarctic Treaty, which, among other things, prohibits mining in the region. So, long story short, we do have gold in Antarctica, but it's not allowed to be mined. Number 2 is, due to its rarity, talking about gold, and virtual indestructibility, all the gold that has been mined throughout history still exists to this day, being melted and remelted and used over and over in different forms. You may be surprised to learn that the United States, as much as we love our gold here, we are actually the 4th top producing country. We fall behind China, Australia, as well as Russia. Also, aside from its monetary and symbolic value, gold is also used in electronics, radiation shielding, dentistry, embroidery, as well as coloring glass. It has a lot of practical purposes aside from just building a large throne to sit upon. And also, gold falls under the category of noble metals, meaning it is relatively unreactive to air, moisture, and most solvents, which adds to its quote-unquote indestructible tendencies. Next, we're going to go ahead and jump into our car here and learn about some of the driving factors, see what I did there, along the gold price highway. The price of gold fluctuates every day, but the starting point is typically coordinated through the London Bullion Market Association, which is known as the LBMA. And usually it's referred to as the London Fix, so if you remember the London Fix, you'll be doing yourself a good deed. At 10:30 and 3 p.m. London time every business day, a large consortium of large financial organizations that deal in major bullion purchases and sales set the starting trade price for the day. This is then used as a benchmark for the initial pricing of gold products and derivatives across the world's markets. Here we have a graph that represents the relationship between the supply-demand imbalance, the demand, and the gold spot price, where the gold spot price is going to be the line that's traveling along the chart, and the others are going to be the color-coded boxes. Take a moment to soak this in, or pause the video if you want to soak up this as well to get an idea of how the spot price is tied to the supply-demand as well as the supply itself. Of course, gold can be traded, but here at Earn2Trade, our favorite way to trade gold is going to be through futures. A gold futures contract is a legally binding agreement between an investor and a seller, stipulating the sale and delivery of the gold at an agreed upon price in the future. And hopefully you look like this guy here and you're having a good time when you get your delivery and price is now at a higher point than when you purchased it. The COMEX officially began trading gold futures contracts in 1974, as we mentioned earlier on, making it one of the oldest exchanges for this particular asset as well as the largest. Here we have some contract specifications for a COMEX gold futures contract. The product symbol will be GC if you're looking for it, folks. The contract size is going to be 100 troy ounces. The price movement will be a minimum of 10 cents per troy ounce. And the price quotation, obviously, will be US dollars and cents per troy ounce. Settlement method will be physical delivery, although it is very uncommon for a futures trader to take physical delivery of a gold contract. The trading hours are going to be nothing crazy here. We're going to be Sunday at 6 p.m. to Friday at 5 p.m. And we also have a 60-minute break each day beginning at 5 p.m. or 4 p.m. Chicago time. Continuing down our contract specification sheet, as far as the trading months in terms of availability, there are monthly contracts listed for 3 consecutive months and any February, April, August, and October in the nearest 23 months and any June and December in the nearest 72 months. As far as delivery may take place on any business day beginning on the first day of the delivery month or any subsequent business day of the delivery month, but not later than the last business day of the current delivery month. That's a lot of fun to read when you get into the futures contracts. They are always a joy. The termination of trading occurs at 12:30 p.m. Chicago time on the third last business day of the delivery month. For those of you that are saying, well, with the COMEX gold futures, I don't know if micro gold futures or E-mini gold futures or gold kilo futures or gold TAS futures are enough. Maybe I want something different or I want a different contract option. Well, you're in luck. There are 3 other big name options out there that people are using, starting with the London Metal Exchange, which is known as the LME. The LME officially started trading gold futures in July of 2017, so relatively recently. Investors are also provided with gold forwards curve data, allowing them to have a long-term view of the precious metal here. Then we have the Multi-Commodity Exchange. Now, this is an Indian exchange that is often favored by investors who have a smaller capital base, since the contracts offered here range from 1 gram, 8 grams, and all the way to 1 kilo. And then finally, we also have the Tokyo Commodity Exchange. The contract size on this exchange is typically where 1 kilogram per contract is approximately 32.15 troy ounces, if that is something of interest to you. For those that are interested in potentially trading gold futures and moving forward with their gold career, we have some tips that I'd like to share with you. My first tip is many successful gold traders strongly recommend starting with fundamental analysis. Fundamental analysis is going to be things like paying attention to market sentiment. This means if the market sentiment of gold is positive, we may expect gold itself to be currently undervalued with an expectation that it might rise. If the market sentiment is negative and we are currently looking at gold prices and view them to be overvalued, then what is naturally expected to happen but a fall to bring a level of equilibrium back to the market? Our number 2 tip is going to be pay attention to all factors that directly influence the price of gold. This means paying attention to the central bank's rate of buying and selling gold. We'll also want to look at the current industrial demand for gold to have an informed idea of which way the market will likely swing in the future. And lastly, we have number 3, and that is to keep an eye on Bitcoin. What is Bitcoin? Those of you that don't know, well, it's a cryptocurrency, and it's arguably the most popular and valuable cryptocurrency out there. It has often been referred to as digital gold, and even though at this point it doesn't challenge gold directly, people do suspect that in the future, Bitcoin could become powerful enough that it could influence the value of gold itself. To sum it all up, gold is something that has been around and has been traded in one form or another for a very long time, arguably just about as long as people have had developed civilizations. It is something that has been sought after for so long for both its visual beauty as well as its practical purposes. Because of these things, it is strongly expected to be something that will continue to be sought after as we work our way into the future. As traders, we're always looking for something stable to trade that still has some type of measurable volatility, and gold falls into this category. It is something that we expect to continue to be sought after for some time, yet is absolutely a volatile market, which can lead to great gains or even potentially great losses for someone that is caught off guard. In the meantime, guys, I hope you do some more research on gold because it is a fascinating subject. Thank you for joining me again for another survival guide episode, this time covering gold futures. I look forward to seeing all of you in the next one. Please make sure you click the like and subscribe button below. But until next time, everybody, cheers, happy trading, and over and out.